Business moves at lightning speed, so you need access to real-time consumer data. Only Suzy offers an AI-powered research platform with quant and qual from their owned audience panel, so you can unlock actionable insights right now. Go to suzy.com/tearsheet to learn more. Today on the Tearsheet Podcast.
I think what we're trying to do is understand the language of both sides. So understand what the corporate needs and how it operates, but also understand what the smaller firms, I'm not talking about startups, I'm talking about scale-ups, need to be able to engage with the larger corporates. And you have to be careful because they can be toxic to each other, and they can create a lot of difficulties if they don't understand exactly where we're going. So there's a need for, I feel, an intermediary in between that actually helps each party express their need, but also be able to fulfill each other's help without destroying who they are, really.
Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zack Miller. And as the financial world evolves, open banking and digital transformation are opening up new opportunities. And as we've discussed on this podcast many times before, this comes with several challenges for banks and fintechs. In today's episode, I sit down with Alessandro Hatami, a managing partner of Pacemakers, a consulting firm that offers a systematic approach that allows its clients to find the partner that's right for them. And so today we discuss some of these seismic shifts in the fintech industry. Hatami has a background, a neat one himself, combining both upstart tech experience like at PayPal and traditional institutions like Lloyds Bank. His background offers a compelling perspective to the future of financial services. He says, financial services is the ideal digital product because there isn't a real tangible exchange, he says. Yet, we know, despite this potential, many institutions are still struggling to embrace digital transformation. I've been saying that for years on this podcast, that the ability for both larger and smaller institutions to partner well, at scale, quickly, and deeply, can be a differentiated, defensible model moving forward. Hatami explains they have gone through an evolution, but they haven't gone through a transformation. And this challenge facing the industry today lies in balancing adaptation with true transformation, from legacy systems to cultural barriers. Through Pacemakers, Hatami aims to bridge this gap. He wants to improve partnerships between established financial institutions and agile fintech innovators. Here's my conversation with Pacemakers Alessandro Hatami.
I'm Alessandro Hatami. I'm the managing partner of Pacemakers. We're a UK-based firm that provides a niche advisory service, which we help large corporates innovate through working with smaller organizations that are more effective than they are in innovating. And we do this through helping them partner, collaborate, or even for acquisitions.
Well, welcome to the show. I appreciate you making time today. And you have a background in financial services as well, right?
I have. I started off many, many moons ago during the dot-com crash. So I started off then. I joined PayPal. I was employee 11 in the UK. I then became the CEO of PayPoint and then the CEO of digital banking at Lloyds. So I kind of bounced off between the innovator and the incumbent. So kind of was able to understand the language of both and to understand how they both tick. I then left Lloyds a few years ago and set up Pacemakers to do a variety of things at the advisory thing that I mentioned, but I also do a lot of mentoring of early stage firms, and I've invested in a few because they're, it's always good to be part of a fun story. And also write a lot about innovation and so on.
And do you find that financial services has particular challenges and opportunities that when you work with clients in that space?
Absolutely. I think if you look at financial services, they have accepted that digital transformation is happening and is transforming their business, but they're still trying to do things the way they were doing them before. So they have gone through an evolution, but they haven't gone through a transformation, let's say. But they have reached this glass wall, which is on the other side, there's a transformed financial services. So they have to start thinking about how to do that, and they have a few challenges to address. But I think, interestingly, if you think about it, financial services is the ideal digital product because there isn't a real tangible exchange. And if somebody said, what is the perfect place for for digital transfer, for a digital evolution, they would say music and financial services. So one has happened, the other one we'll see.
Right. We've been talking about transformation for a long time on the show, and we're still in the early innings. We get that. How is Pacemakers and your approach, Alessandro, different than maybe some of the other approaches out there in terms of helping build partnerships?
I think what we're trying to do is understand the language of both sides. So understand what the corporate needs and how it operates, but also understand what the smaller firms, I'm not talking about startups, I'm talking about scale-ups, need to be able to engage with the larger corporates. And you have to be careful because they can be toxic to each other, and they can create a lot of difficulties if they don't understand exactly where we're going. So there's a need for, I feel, an intermediary in between that actually helps each party express their need, but also be able to fulfill each other's help without destroying who they are, really. So if you think about large corporates, I think they are run by humans, and they say they see that the businesses, that the technology has changed and the environment has changed, the market has changed, so they need to adapt. But they also live in a place which was built on legacy, built on relationships and technology that was designed for some reality that really is no longer there. So as they go through stages of innovation, they are transforming, but they're not doing that last step. They're evolving, but not really transforming. So if you want, there's we like to think of them as 3 stages. We think of the adapt stage is when they start adapting the existing capabilities that they have to a digital capability. So you're able to make a bank transfer because you're able to check your balance and so on. They then evolve this, and what they do is things that you couldn't do in a branch. So they start telling you about PFM, personal financial management, understanding how you're performing, or giving how you're spending your money, or being able to do some enabling you to transfer things or to manage investment products that are not possible in branch, and all the capabilities there. And what that does, it creates a series of capabilities and skills that suddenly hits a glass wall, and that wall is what is called legacy. And legacy is not just IT. The IT legacy is the easiest thing to do, is operational and cultural. And they need to start thinking what's on the other side. And what's on the other side is very simply a financial services product or a financial service proposition that is not designed at selling a product to an individual, but it's designed at understanding what that individual needs and creating a product that is bespoke, that is designed specifically for them, on pricing and conditions and characteristics of the product, a whole variety of variables. But banks were designed to sell that standardized product, the credit card at a certain rate, the personal loan at a certain rate, the mortgages at a certain rate. And with digital technology, you could create a super bespoke environment, which would be very much counterintuitive for a big bank. So that's where we stand right now.
We wrote an article recently called "The Hug of Death," which was one of these issues of finding good partnerships between, incumbents and fintechs. What do you think are the most common pitfalls that financial institutions face when seeking collaborations? Like, where do things fall apart?
There's several. I think one important one is from the side of the corporate, is not realizing that the time matters to the smaller firm.
Right, different speeds. They're working at different speeds. Yeah.
They're completely different speeds. And if you work with very small firms that are in transition, you actually kill them. And if you work with larger ones, they just get bored and move on to something else. So you see a lot of failed partnerships that are based on timing and not understanding that. On the other way, looking at from the innovator into the incumbent, and I think is understanding what drives decision making. And I think there's an expectation in a lot of innovative companies that if they tell the big company what they can do, the big company knows exactly where to fit the product and what to do with it. And I think that is not true. So you have to explain to the big company what you could do for them, but you have to explain it to them in their own terms. So you have to translate it and say, okay, that product that you do this way, with us you could do this other way, and they would have very much a benefit that looks that is measured in this format. And the ability of understanding how you translate your proposition into something that is measurable by the bank is something that is actually escapes a lot of the corporates, a lot of the innovative companies. And that's the way to communicate to the corporate. Translate your proposition into their language.
I like that a lot. And the language will be different. I think what's also interesting, we've spoken to a lot of heads of innovation on this show. And at least from what we've heard is that when there's a champion inside the larger institution, the incumbent institution, that's shepherding the partnership through, those seem to work a lot better than sort of like, all hands on deck type partnerships.
Absolutely. That's fundamental. A champion is fundamental. And in my experience, this champion has to have a P&L. Okay?
Right.
And
can't be the innovation
have
person.
A voice that is heard.
Right. Yeah.
I think the innovation people are fantastic chaperones, but they will never be the ideal owners. So if you look about any collaborations between an incumbent and the challenger, it's never driven by the innovation team. It's driven by some guy that realized that, or some gal that had realized that there was a problem with their business, that there was something that was eating their cake, and they were able to put a business case together. The ROI is the number one secret weapon for any type of innovation. So if you can justify an ROI and explain an ROI, you have it made. I think anytime you work with a large corporate, you have to think about several things. One is, who is your supporter? Who will support you? And this person is somebody quite higher up in the organization, but not necessarily the CEO, and somebody that has a voice and has an ROI. Because the ROI, financial services organization, most of them at least, are very financially driven, understandably, and who allows the bank to meet the certain financial targets is the one that is listened to. And the second element you need to find out is, who are your enemies? Who will not benefit from your transformation? So if you provide who would you challenge? And they're not obvious, So for example, you go in, you have a new technology that allows you to generate a lot more capability from your using AI to do data analytics. And you say, well, you can let go of 30% of your staff in that business, and say, wow, great. Everybody say, oh, savings, etc. But you're not thinking about that person who has a team of 100 people, that suddenly this team will become a team of 70 people, and then therefore they will have less importance, less relevance in the business. So there will be, I'm being completely graphic in this, but there's people that you don't benefit, that your proposition does not benefit in the day-to-day, even though they see the big picture. The third group of people that you need to be cautious about, or you need to be very careful with, are the stakeholders, the gatekeepers. Okay, this is legal, compliance, risk, marketing potentially, and all these variety of things. These are people that could be your friends, but also could be your enemies, and they need to be nurtured, they need to be guided, etc. So the biggest mistake you can make, for example, is to present something with a big reveal to these people. The big reveal is toxic, it's dangerous. So what you do is you try to involve these people up early on in the organization, and believe it or not, they actually add value, and you improve on your proposition when you have the head of legal there, or you have somebody from compliance and risk and fraud, and also these people helping you define the proposition. So think about these three things: the supporter, the enemy, and the gatekeeper.
I like that we talk about it in militaristic terms.
Sound militaristic, I'm sorry.
It's a good, no, it's a good metaphor. But I'm curious if you can give us an example, Alessandro, of a successful collaboration that Pacemakers facilitated, and what you think made it particularly effective. Do you want me to mention names of companies, or I prefer not to if I have to? It's up to you. Like, I understand the confidentiality issues, but if you can give it at least some color, like, a bank or a payments company or something.
Italian bank was I can mention them. They're Intesa, and they were looking at ways of engaging with corporates, with companies to help them develop new capabilities. So they came with us, and we did set up a variety of sessions with the different leaders of the organization, so to show them how different innovations can really impact their business. And in one of our meetings that actually was not part of the core, we introduced them to a UK-based core banking platform called Thought Machine. And it was a really nice meeting. They spoke with each other, etc. But long story short, they launched their digital bank using Thought Machine. So it's entirely separate from the core, and it's one of the most successful Italian digital banks using this completely new platform. The good thing about it is that we help them think through a lot of things through. So we suggested to them that they should not be using this as replacing of the core, but as a proof, creating a pilot on the side that actually proves their business model without having to do the heavy lifting of doing a giant migration, which may come, who knows. But proving that it was possible to create a bank in a relatively short amount of time and launch it with that was something that we're quite proud of.
What role did you play in there that I guess Intesa wouldn't necessarily have gotten if they had tried to do this on their own?
I think one element of what we do, which is distinctive, is we try to understand our clients. So the model that we use is the model of executive search, of a headhunter. Okay, so Intesa came to us and they said, we're looking at this and that and a variety of needs. But what was most important to us was understanding who they are and how they operate and who are the different objectives that they have, what are the goals that they have set for themselves, and so on and so forth. Understanding that allows us to see which elements of the innovative space that they were looking at are relevant to them. So what we do is we start off with an engagement with the client, understanding exactly their needs, but also understanding the different people that will be actors, and that not just the innovation guy, but speaking to IT, speaking to business, speaking to all the different divisions and gatekeepers and stakeholders that I mentioned to you. On that basis, then we create a set of guidelines that allows us to map the market for them. So we said, these are the trends that we see in the market in that area that you're interested in. These are the different innovations that are happening there. And at the end of this process, we say, this is a list of all the players in that space. So at one extreme, you have the super giant global multinational company, and the other extreme, you have that startup in Romania with 5 employees, list of 30, 40 companies, and we say these are the 5 that, in our opinion, you should be speaking to. But at that stage, the bank makes a decision based on a complete vision of the market. So you understand the trends, you understand the players, you understand who you should speak to, and they may or may not disagree that they have to speak to these people, but they usually do, because we base that on some thoughts. And then what we do then, we facilitate the engagement, explaining to both parties how to interact with each other, and not to go and have all the money, I'll throw it at you, I'll do whatever I want. Or the other side is, I'm the most innovative business in the world, it's obvious that what you can do with us. None of that happening. Okay, so we become a little bit of translators. So we help the relationship go through, and if it's lucky and all the ducks align, then they will lead to a partnership, collaboration, and something deeper. I think what's fundamental is to enable the dialogue to happen, because they both want to deliver the outcome, but they are doing it in slightly different ways, and I think it's important for somebody to help them realize this. So the analogy with the headhunter is what I was saying. So you get the brief, you create a long list, you interview for the short list, and you help do the interviews. But it's the client that ultimately decides. So we don't do that. We don't say this is the right answer. So your answer is between these 5, but this is all of the other players also.
That makes a lot of sense. So that's a good example with Intesa. One of the things we talk a lot about on this show is the move to open banking, and this need for financial institutions to be more open and share data securely and stuff like that. Do you see that impacting your business? I do believe, and we've been saying on the show for a while, that the ability to partner is a strategic advantage for financial institutions. The ability to do it well. Do you see that impacting the industry?
Absolutely. I think it's not just my industry, but it's every industry. So the creation of these platforms where you can have everybody can be an entrepreneur and engage from transportation to marketing to products, et cetera, is coming to financial services. So but there is a challenge in that, is obviously because you're dealing with people's money and you're dealing with large numbers and you're dealing with regulation. You can't really abandon everything. So banking as a platform is definitely the future, but it would not be a bank as a platform, but banking as a platform. So there will be an interaction, there will be a relationship between you and a financial institution. This financial institution may decide that the services that they provide to you are not delivered entirely by them, but they have to guarantee that that service is delivered to the standard and quality that you expect, and that is compliant and regulatory acceptable, and it's not too risky, and it's cyber secure. For a variety of things that you have to think about. So I think the future in banking will be the banks will become the gatekeeper of my financial relationship. The delivery of the services and the products that I get may or may not necessarily be delivered by the bank. And these services are not necessarily just the loans, but also, for example, the authentication of who I am, the verification of transactions are fair, the proposition of new ideas and new investment opportunities that I want to do. They will be guaranteed by them, or they will be validated by them, but they will not necessarily be delivered by them. And this is a big shift, because the banks always thought that they have to manufacture everything they deliver. That is an outdated perspective, and technology is proving that.
Alessandro, we haven't had somebody on this podcast in the last year that we haven't talked about the potential of AI, and figuring out exactly what's the stake and what's the sizzle here. Obviously, there's a lot of excitement around generative AI right now, but what role do you see for AI and machine learning in reshaping financial services, and how does that impact the kind of partnerships that you recommend, if it does at all?
I think AI is a gigantic opportunity for financial services organizations, but there's a challenge. You have to create a service that is compliant and is not too risky. It doesn't expose your customers to unwarranted risks. So if you think of AI, what AI really is a means of absorbing data, huge amounts of data, and processing it in ways that would be very difficult for a human to do. So in doing that, we see some patterns, we see some flaws, we see some challenges, so we see them changes in routines, and these can be very good tools to identify fraud, very good tools to identify customer expectations, very good tools to identify the best way to communicate, and so on and so forth. But I don't think that AI, or at least what AI is today, and by definition, you will not create a future product that nobody has seen before. You will find a product in the huge amounts of data that you process that was interesting, and AI will identify this as something interesting to bring up, but it's not going to create something completely new. It's going to identify something that was overlooked somewhere else and bring it there. So the way I think about AI is think about it as a really efficient, effective, interesting way of capturing data through the new visualization techniques and all this stuff, and also processing gigantic amounts of data. So it will be always very complementary to the human. So there will be some services that we definitely want to do with AI. So for example, some customer service, the way I see my data, how can I be protected from fraud? How can I identify measure my risk exposure, and so on and so forth. But somebody coming and having dialogue with me about my financial needs, etc., what this entity will do, they will tell me what others have done, looking at millions of people, and suggest to create a prototype of me or a model of me and say that this model will be doing this. Now, that can be a good way for me to be able to see what people like me are doing. But I think it will need a human interface for the interaction to be acceptable to me, and also to be compliant, because there will have to be a human that says, yes, I guarantee that this is true, because that human represents the bank. If we get to a point that the banks are willing to take the risk of mis-selling coming through an AI platform, then maybe we'll see them do the sale. But I think at this stage what we will see is optimization of a variety of services that are right now done in very ineffective and slow processes through a combination of human and computers. But in the future, I think it will be taken on entirely by AI. But the actual sale and interaction with the customer will always remain as a human-to-human interaction.
Alessandro, I want to go back to something you mentioned earlier in our conversation, and that was around the cultural factors that determine the success of partnerships. I'm kind of curious what you think those key cultural factors are to make a successful partnership.
I think the one of the big challenges that you have culturally is a series of perspectives on what the customer wants and what the customer needs. So I think what's happened is that in the past, if you think about the ideal bank, is the bank that was at its origin, the Bank of the Middle Ages, which was a dialogue between the banker and the customer. And you would sit in this palace somewhere in Genoa, and you would have a conversation. And the two parties, one would express a need, the other party would say, okay, how can I fulfill the need of this individual? And the banker would understand the need of the individual, would also know the individual very well, because they were probably relatives, because it was all an elite engagement. and they knew each other very well. They belonged to the same social group, etc. So they knew each other in a very clear way. So the banker would create a product that reflected what the customer was asking for, but also reflected what they knew about this customer. The customer also at that point realized that the banker was going to create a product that had those characteristics, that was being designed for them, and also knew that the banker would never mess around with them, would never screw them, because they belong to the same society. And they would, if they did something unfortunate to the customer, they would lose customers, they could be banned, etc. They would not be invited to the cool parties, etc., etc. So the banker had a huge incentive not to let down the customer, and the customer had trust into the banker. What happened as industrialization happened is that this one-to-one dialogue was no longer possible, so they had to create products. And these products were limits on pricing, conditions, and so on. So now when you go to your bank, you're not creating the product that Zach needs. When you go to your bank, the bank is not saying, okay, Zach, let me understand who you are. Let me tell you what is the best ideal credit card for you to have, and what is the best personal loan, or what is the best pension plan for you. You just say, I have these 5, which one do you like better? Okay? And one of them will be close to what you really need, but it's not necessarily that. So I think in the future, what we will see is that this move from this culture of selling products to a culture of focusing on the customer expectation. And this change is very strange, very difficult, because in a culture where you sell products, the P&Ls and the silos of the business relationship where the money goes through is through the silos of product. Okay? In a world where the customer is centric, they go through the customer. So it's a segmentation product, not through the segmentation P&L, not the product P&L. And that requires the banks to kind of transform themselves completely, okay? Which is not trivial in today's structure. So I think the biggest problem we have right now is the banks still sell the things themselves as the means of selling financial product and not the means of fulfilling the need of the customer. I don't know if I'm making sense. I'm
totally making sense. I do.
For a bit.
Yeah, but I think we've had quite a few guests come on the show talking about that need to move from these silos that are organized around product to basically focusing on the customer. Part of that's a technology problem because they have different systems for each product, right? Like, so getting a unified view of the customer is still a challenge for a lot of banks.
And they don't communicate. If I go to my bank, for example, I have, let's say, 3 products with them. They see me as 3 people. Yes, there will be a database that says Alessandro Hatami has these 3 products. But ultimately, I'm trying to be cross-sold things within the product frame rather than across the whole bank. And the reason why that happens is because each one of the product owners on these silos has some targets, okay? And they try to maximize their targets. There's no target that says, let's maximize the profitability and the satisfaction of Alessandro. There's a target that says, let's sell more cards, let's sell more loans, let's sell more mortgages, you know.
Alessandro, it's been great talking to you. Thanks for joining us on the Tearsheet podcast today.
Pleasure. Thank you.